It's still earnings season. For those of you that do not know, I trade the U.S. stock market. Right now we're in earnings season. This week we have a lot of retail earnings, actually this week and next week, like Target and Kohl's and Walmart, things like that, which guess what, have been affected by tariffs too. So today we're going to talk about some recent trades that I did. Well, I even have today's trade in here. And the topic really is how to trade during a tariff war. That's what we're really going to talk about today, which is important because obviously we are still in this period where we're on the tariff pause, as Trump says, which is going to go into late June. But it's probably going to go on pretty much the entire year of 2025. So if you have questions as we go along, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP if you have questions. And you can follow me. Probably the best place to follow me actually is YouTube. When I appear on TV, I talk about the stock market. If I was on today, I probably would not have sounded as excited as some of the people that were on TV today about what happened over the weekend with the tariffs with China, where the tariffs were lowered, because we still have tariffs on and we don't have a deal done. So the fact is the tariff war over with China? The answer is no. So we saw a gap up in the market today. Actually, let me see if I can just pull this up. Can you see this? The cues. So we had a gap up in the market today. Just go over it. Again, this is like just reviewing here, what is a gap? A gap is the difference between the close and the open. So the stock market closed Friday, today's Monday, at 487.97 and opened today at 506.99. Again, when you're looking at the market, you say, whoa, that's a big gap. To me, it really wasn't, but I could understand where people could say that it was. But I actually didn't go long the market today, okay? But there's no denying it that the market is, in fact, here's the overall picture, in an uptrend. The last time we made brand new all-time highs, again, I'm looking at the QQQs. It seems like a really far away, but it was 219, and we were at 540.81. So again, looking at the overall market is now in an uptrend, okay? So is the tariff war over? No, it is not. Now, what I do is I'm an active trader. I get in, I get out. I get in day trades quick, I get out of them. I do an option, and I could be in an option for one day or maybe a couple of days because I'm doing the weekly options. But either way, in this environment, actually in any environment, but particularly in this environment, you need a plan of action to make money. And if you follow that plan, you're going to be successful. For me, it's looking at gaps and specifying whether or not the gap is going to follow through in the direction of the gap. Again, we're going to talk about more in a minute. Or if it's going to fail. Okay. So again, that is a method that I've been doing now for the last 17 years. So somebody asked me, well, does this work now in this with tariffs and Trump tweeting every other second? Yes. There's no system that has 100% winners. You are going to have things happen that sometimes you plan everything out, trade looks good, looks great, and the trade doesn't work and it loses. That is why that when you trade, you have to size yourself according to the size of your account and your risk. Because there's always going to be something that happens sometimes, even in a trade that you love, that you like, that it doesn't end up working out. Now, again, where do we go from here, which is what we're going to talk about. But my point is that in times when it's volatile, or times when you can't predict necessarily where we're going to go, or you think you might know where we're going to go, that is the time that you should get back to the nuts and bolts of writing things down, making a plan of action, figuring out where you're entering your trades, figuring out your exits, and doing it all ahead of time, not on the fly. Because if you're like on the fly, again, you could be on the fly and up at a trade, and then Trump tweets, and then all of a sudden you're down in a trade. And I'm just saying Trump, it could be anything. It could be any kind of news that comes out based on tariffs, okay? And I see some people that came in late. Again, if you want to chat with me, you go down to choose my name, individual user, and you type in the box at the bottom there where I just said hi. But anyways, even if we weren't in a tariff war, okay, even if this wasn't the case right now, in any market, any time, even times when it's not volatile, you should always take what you're doing seriously. Any amount of money, whether it's $100, $1,000, whatever amount you're risking, any money that you choose to risk in the market, you want to use to take a trade that is thoughtful. Like, I put a lot of thought into my trades before I taking them. And again, I've been doing this for like I said, 17 years, but trading, the type of trading that I do, is really very, very short period of time during the day. And again, I don't even need to probably say this. If you've been trading for a while, you know that trading requires a positive attitude. But what I've found is in tricky markets, meaning something happens that you don't expect, okay? Could be a trade war, could be something else. People get all in their head and then forget the nuts and bolts. And what I'm telling you is you have to go back to the basics. You have to go back to the nuts and bolts of the strategy. And again, this is something that I tell myself every day, because again, you could have everything figured out perfectly, but you still have to know where you're getting in and where you're getting out and stay on the system. So for everything that I do, I use one system, and I put the stats in here for the year for 2025, but I haven't had any time to update this. This is only through April 29th, so I've got to update the last week or so. Today we did Disney, which we did go long today actually, and I have the trade in here. But year to date through the end of April, these are day trades in the room where I traded on margin, and again, I have a margin account. If you don't have a margin account, you'd have to have a margin account to do these trades, unless you wanted to open up an options account. But again, year to date through 429, stats for the room are 469,857. And again, I don't have the last week and a half in here from May, but we were at a 69% win ratio, 1 break even, 27 losers, and 59 winners. This was again through the end of April. Now, at the beginning of the year, we came into the year, like I said, and before any of the tariff stuff happened, everyone was talking about the Fed. That's all anyone talked about, all anyone cared about, how many times they were going to lower rates this year, and people said 5. And again, then the year went on, then the tariff stuff started in March. And then now, yeah, people are talking about interest rates in the Fed, but they're talking about tariffs more than anything else. But again, people need to remember that actually interest rates are still extremely important. What the Fed is doing is extremely important. It is going to affect the market. And as much as the administration likes to set policy, or Trump likes to tweet, and the tariff war is continuing on, because we haven't made deals, these are all on pauses. The fact is that the president does not control the Fed, he does not control the bond market, and he does not control interest rates either. And again, this isn't updated through the last 2 weeks here of options, but year to date with options over 2.1 million, you can have an options account, a cash account. You don't need a margin account to trade options. If you want to be in and out of a lot of trades though, you would either have to have it set up as a cash account or margin account. And if you want to do options with your retirement account, I suggest that you call your broker and make sure you can do them. So again, this isn't through today, but win ratio for the year for the newsletter is 76%, which is great. We've done a lot of puts. I will say that. Again, I actually did a call in Disney today too, but mostly we were doing puts in the last few months, which is kind of interesting because again, the market was at new highs actually to start the year when you think about it. So again, stats for the year prior, not through today. I will update this if I can by the end of the week or by next week, over 2.5 million. Now I've been trading for 17 years. People say, how much money do you need to trade? If you risked $1 and only did one contract, okay, and risked $100 or whatever it cost, like Disney was $1. If you just risked $100, you can make money even doing one contract or 10 contracts. You don't have to have a big, huge account, okay? If you do and you want to have a huge account, you want to take big risks, that's fine. My suggestion is to do the class first before you start to take an advanced trader risk. But again, getting back to the topic for today, which is tariffs and the type of market we're in, you can make money in any type of market, but you have to be able to stay on top of what you're doing, because if you get sucked into the tweets, if you get sucked into the news, if you veer off of what you're doing or trade in the fly, like I said, you're going to have a hard time then if you don't have a plan of action. For me, the most important time to get a plan of action is actually when I'm not even in a trade, when the market's not open yet, early in the morning, or I'm organizing and figuring things out for the following week and the weekend. You know, like I was looking at charts actually yesterday on a Sunday. So again, my process is I get up and try to figure out everything I want to do before 9:30. And again, today we did Disney. That was something that I liked before 9:30 even hit, okay? And again, anyone has any questions, you can write it in the room as we go along. But in order to become successful, you need a system. You need a system in any market. But in this type of market where tariffs are taking up everyone's, screen time, everyone's talking about it, radio, television, podcasts, you really need to be sunk in your system, like all in kind of thing. And because if you're not, you're going to get swayed like a tree. Like it was the trees were blowing in Central Park this morning. I live along Central Park. It was windy. The trees were blowing. You're going to blow this way and blow that way with every tweet. It's going to wreak havoc on you. It's going to be difficult for you to make money. You're not going to have conviction in anything, up or down. And you're not going to be able to move forward, okay, what you need to do. Everybody here? Everybody hear me? Hello? So again, how can you do this? You have to have a good system, but you also need to look for specific stocks that don't need the market, that will work, the trades will work, where it doesn't matter if there's a pause on tariffs, or if there's no tariffs, or if we have 300% tariffs, or whatever, okay? The idea is to find trades, good solid trades. It could be longs or shorts. Again, for those of you that don't know me, I prefer to short, but that don't need the market, because then you don't have to worry if Trump tweets. And again, when we came into the year, actually, we were at new highs. We had just come off the election in 2024. We were very bullish in November, very bullish in December. I was doing lots of longs. We were doing longs at the beginning of the year, okay? Then we started to short early, before the collapse, before the tariffs, and we captured the move to the downside. But the fact is, there's not always something that makes sense to do with the market. And you can be kicked around in trades. You have to make money in any market. So in this type of market, where we still are in a tariff war, again, I know everyone's exuberant today and thinks everything's fine and everything's great and everything's going to work out and it's beautiful. And we're going to run back up to the highs and there's no problem and we're on pause now. That could be the case. Maybe that is. Maybe we will. But maybe we won't, okay? So the idea is to find trades like again, I'm going to go over Disney, which we did today, that actually have nothing to do with the market. And then you will be in a better frame of mind where you're not caught up in the news cycles. Anyways, getting back to what I was saying, you need a system and you got to follow it. When everything's great and everything's going fine, it's easy, and we're in a power trend, which the market was in a power trend, to be honest with you. From the date of the election all the way up to December was power trending up. And then we were like power trending down when we had that hard sell-off from like March into April. When everything's going one directional, market or market stocks, I'm saying market stocks, again, everyone's fat and happy, but that's not usually the case all the time on a 12-month calendar year. So you've got to have a system which you can use and follow daily, and again, where you're not blowing like the tree in the wind. So how can you find these picks that have nothing to do with the market, okay, where you don't have to worry? Because again, my take on tariffs is that it is not over. And the exuberance today is overblown. It doesn't matter. The market was up overnight. That's a reality. But I don't think it's over. So again, when you're looking at everything, you're like, okay, what's really happening here and how can I make money on any given day? Monday, Tuesday, Wednesday, Thursday, Friday, tariffs or no tariffs. All you need is one pick, maybe two. I try to have like one or two things I'm looking at. But the reality is that anything you're in at any given point in time can only have one source of control. You can only have one control. You know, it's a tug of war. Who is that control? And then you're trying to determine that and figure it out. So how do I do that? I do it using technical analysis. Again, I call it advanced technical analysis because I'm looking at a daily chart, and the way that I'm figuring out the side of the control is in the gap. But there can only be one side in control at any point in time. Even if you think there isn't any control, there actually is. And that is the tricky part with a lot of times with people. It can be very, very tricky. Again, especially in times like this. But the fact is that there's only one control. And if you think about it and you can get on that side of control, it doesn't really matter how you take the trade. You could do the trade on a 1-minute chart. You could do the trade as a day trade. You could do the trade as a swing trade. You could do the trade as an option, as a call, or a put. So a put is an option, which is a short, and a call is a long, okay? So again, how do I do this? I look at the chart, and I'm trying to read the footprints of institutional money that are coming in. So how does a stock move up? It gets bought. How does the stock fall? It gets sold off or shorted. There's institutional money. When I'm saying institutional money, it's big hedge funds that come into stocks. They can short stocks, and they can also sell stocks too, okay? So again, I prefer to short, but I do go long. Again, we went long Disney today, but the fact is that the control can only be on one of two things, which is what? The bulls or the bears. So again, if the bulls are in control, you want to be long. If the bears are in control, in order to make money, you want to short, okay? I know this sounds very simplistic, but reading it isn't. But it's common sense that you'd be like, oh, this totally makes sense if I can do this, because that's the way to do it. A lot of times traders, retail traders, day traders are trying to always find some tricky way of going against what's happening, and that's how they think they're going to make money, and all this money by going against something. That's not true. You're going to get run over by a truck if you're against institutional money. And again, temporarily, sometimes you may feel like it's the side of the retail traders. But in the end, it's the big position players in the market that always control everything that's happening. So if you learn how to read the footprints of big position players before the momentum occurs, you can take the positions in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader. And not only that, you can win big on trading on that side of power. Now, again, first of all, any questions before I keep going here? Have any questions from anybody so far? We're doing okay? Again, you go down to 2 individual user and choose my name to type a question if you have one. I was just going to say something. I forget. Shoot. Okay, let's talk about gaps. So we're talking about institutional money. We're talking about the tariff war. I'm saying find something that's going to work regardless of tariffs so that you can get higher percentage winning trades. And I'm saying focus on choosing the control side of the trade. Again, whether it's bullish or bearish. And I've developed a method where I figure that out based on the gap. Now, we started talking a little bit earlier about what a gap is on a daily chart. Just pull up the chart here. Here's Disney. Everybody see Disney? Let me blow it up. So Disney had a bullish gap today. Could have fallen, could have fell, could have filled the gap. It didn't. It was a long. So let's take a look at it. So the stock closed here. It was Friday, 105.94. Boom, gapped up. Open at 109.87. Again, target was 111, 112. Again, could continue up tomorrow. But we did a day trade in this today, which I'm going to show you. But anyways, this is a bullish gap. So this could have fallen, closed red, but it didn't. It actually closed green. So we went long this. So this is a gap up. Now, back in here, I'm going to go all the way back. This was when everything fell off and collapsed, 4.2 to 4.3. Disney had a gap down. Again, what is a gap down? It means the close of 4 o'clock and the open at 9:30 is a lower number. So what happened here? This was April 2nd. Disney closed at 97.88 and then opened at 94.51. And if you shorted this or did a put, you made money. It worked. Now, again, can you short every bearish gap? No. Can you go long every bullish gap? No. This very well could have fallen today. I could have lost, or I could have not done it, but it didn't. So it's not as simple as just looking at the gap and taking in the direction, or looking at the gap and taking in the opposite direction. Oops. So getting back to what I was saying, I'm looking for the quick money as fast as I can get into it, but it's because I'm focusing on the morning. I'm focusing on the morning. I'm focusing on momentum. Again, let's go over more here what a gap is. This is Apple. Apple had a gap up today. Closed here, gapped up. Over here again, same week. April 2nd, April 3rd, gap down, dropped. Closed here, gap down, rallied, fell. Okay? So there's a million gaps in here. Here's one that actually failed. Closed here, gapped up, fell. Again, that was a month ago now. That was April 14th. So again, you could look at 100 gaps, a million gaps. The idea is to find the ones that you want to do in the direction of it that's being moved with institutional money. So again, we're talking about institutional money and big money in the market. Institutional money doesn't do something every single day in every stock. Do you know what I mean? So sometimes they're not putting a position on at all or taking any position off. Sometimes nothing's happening. That's okay. So you don't have institutional money moving every stock and the market all the time, every day. No. In fact, last week, the market was in such a tight range the entire week last week, it was hardly moving at all. Institutional money was waiting. You could say, well, waiting to see what happened over the weekend with the China and U.S. meeting, whatever. Okay, you can always say a reason for this, that, earnings. Like I said, there's earnings this week. But if you find the gap itself, you don't really need to know the reason. All you need to do is find it, figure out if it's going to continue, and then go with it. Because you want to trade with the power, whatever's coming in. Again, if it's buying or selling or shorting, again, hedge funds, institutions, big funds can short. But you don't want to make trading so hard where you're trying to go against it, because that's where you can lose. So like I said, I developed one strategy to trade that focuses on spotting institutional money and one focus on gaps. So again, getting back to the trade war, today's topic, I don't think it's over. But it's 100% clear that, again, Trump is going to continue to try to manipulate markets to seem that everything's fine by doing these pauses. Will the rooster come home to roost at some point where the markets sell off? I don't know. I'm not going to short the market up at brand new all-time highs if we run up there. No. Could we be in a range? And could the range be all the way up at the highs where we're in February and all the way down to the April lows for the summer? Yes, we could be. And that range is ginormous, to be honest with you. So the best thing for you is in any market, like I said, tariff war or non-tariff war, is to find things that are selective, very, very honed down, so that you can make money where you don't need to worry about what is the end result of the tariff war, which no one really knows. No one really knows. Okay? Any questions here so far? Okay. Yeah, we're going to go over the Disney trade in a minute. So the Golden Gap 26-point rating system is how I figure out the direction that the institutional money is going. That's how I figure it out. Again, this is a process that you can learn from me. It's not beyond the realm of comprehension. You can learn it. It is also something that I do every morning before the market even opens. So I am not rushed to do it on the live day when I'm trying to figure out a trade. So again, we've been talking about gaps. I've been showing you some examples. Let's go over it, the basics again. A gap is a difference between the close and the open. The U.S. stock market closes every day at 4 and opens every morning at 9:30. So we're closed right now. It's 4:30. And you say, well, what's going to happen tomorrow, Melissa? I don't know. I don't know. Why? because tomorrow morning before 9:30, there's economic data. In fact, it's very important data tomorrow. We have an inflation number. And guess what? The market's going to gap. I don't know if it gaps up and I don't know if it gaps down, but it's gonna move because we have economic data that is very important that's coming out in the morning. So stocks gap most every single day. Not every gap though is a good gap or what I call a golden gap. I'm looking for gaps that are predictable. Again, how do I do that? I use my gap rating system. The gap rating system, again, is the nuts and bolts to tell me what to do. Then I size myself, I take the trade, I size myself accordingly, figure out where I'm getting in, and have an idea where I'm getting out. Because again, if you don't, you're blowing like the wind based on news alerts or breaking news or tweets. So we were talking about bullish gaps and bearish gaps. Again, here's the Disney. This was today. Actually, let's go back here. This was last week. So going back here, Disney had earnings. So we were in this actually last week. Closed here, gapped up. And we did calls in this. I think I have this trade in here. If not, we'll pull up the chart later. But anyways, this gapped up here. Okay. So this was last week, the 7th. Then the 8th, Friday, Monday. And then this is the day we did it here. So you say, what's happening here? You say, oh, this is a bullish gap up today. Looks like Disney got bought. Okay. Closed green. Almost got to 111. Low is like 108 and change. You say, well, what happened here in this guy today? Well, it got bought. It got bought. Okay. What is a bearish gap? Let's look at QCOM. Stock closed here, gap down, open, dropped. This was 2 weeks ago, May 1st. Stock closed up here roughly around 147 and change. Gap down here around 139-ish. We did a short in this. Fell. Okay. So you say, well, what happened here? Looks like they dumped it. This was a bearish gap. So you would have wanted to short it to make money here. Came all the way down, fell, broke 135. Any questions? So again, I'm looking for momentum in the gap to make money. QCOM had a big fat red bar. Again, Disney actually, I wanted it to go even more today. But, was able to get $1 out of it. But my goal is $1. $1, trying to get $1 or more. That's not crazy expensive things like Netflix, but for the most part. But think about it. Momentum, momentum, momentum. If you have 1,000 shares and something moves 10 cents, you're going to make $100. If 1,000 shares, something moves $1, you're going to make $1,000. Which would you rather make? You'd rather make the 1,000, okay? Because again, you want to get the big move, the fat move. That's the whole point. That's the idea. But like I was saying, it's very important to use a system. It's very important to be strategic with what you do. It's based on the direction that's going to have to do with you making money or not. Because again, all trading is, and I don't care how you do it. I don't care if you do an option. I don't care if you do a swing trade. If you buy the stock outright, if you short it as a day trade, a margin. It's all based on the directional move. So how do you make money? You got to get the direction right. If you don't get the direction right in your trades, you're going to lose more than you ever win. Okay? And again, I think it's very important in this type of environment to trade independent of what's going on of the tariff war. Stocks that have nothing to do with it that aren't going to be affected, and to make sure you get the moves and get out with the profit before something happens that, again, could turn your trade around. Any questions here so far? I see some new people. I see some regulars. I'm going to keep going if you don't have any questions. Anyway, success or failure has everything to do with the quality of your system, which I've been trading for 17 years. So now, again, I was trading, remember it was 2018. Remember, I was on Neil Cavuto a lot in 2018 when Trump started this whole thing with tariffs. Market had a big sell-off then in 2018, and then it rallied back. Then it made new highs. And we had all kinds of volatility. I was talking about it on Fox at that time. Again, seems like a long time ago. That was 7 years ago now. So in any market, you have to have a system that works regardless of what's going on with the overall market or any news events. So one of the reasons that I prefer to short, even though I did go long Disney today, I tried to find something to short today. I couldn't, or I would have shorted. But I really prefer to short because moves to the downside happen much, much quicker and faster than moves to the upside. So again, while everyone's very bullish on markets right now after the weekend, one, because Trump lowered the tariff rate and paused it with China, if we are going to sell off again, which I don't know, let's say we are, I have no idea. Like I said, maybe we won't. Maybe we'll run back up and make brand new all-time highs. But if we do sell off again, it's going to happen like that. And it's going to happen very quickly because moves always happen faster to the downside. So again, long time ago, I made a lot of money in a short. When I first started trading, I didn't know what I was doing. I didn't know any of this stuff. And then I said, oh, this is it. I want to do it. And lo and behold, there was very little out there about shorting. And then the stuff I found that was out there about shorting that I tried to investigate was worthless. Okay. So yes, I will go long. And I'm not long the market right now. Maybe I'll change my mind tomorrow or the next day. I don't know. But the fact is, shorting has given me a niche. It's given me a niche because you have stocks that sell off all the time. And they could, for any reason, for various reasons. Again, it could be news, it could be earnings, it could be a plane crash, it could be whatever. But with the overall market, again, most of the life of the market, it actually is in an uptrend because you have a lot of retirement money in the market and people prefer to go long. There's very few times when the market will be in a downtrend for long. We had a period in 2022, I think, or 2023. No, I think it was 2022. I have to look back on a chart. I think it was 2022 that we had a period that we had like a downtrend going on for a while. And then it didn't last. And again, we had this year, same thing. Now that's over today. Again, will we hold it? Will it last? So again, you have to be very flexible when you're trading. But if you hone in on one thing that you're looking for every single solitary day, again, you're trying to find the needle in the haystack. You can do that regardless whether the market is falling or rallying. Again, here was the QCOM. You could have done QCOM over here. Again, let's talk about the gaps. Stock close here, gap down. I didn't do this QCOM here, but you could have. This was a really nice trade. From the day that we had this here, the stock was over 150. And then within the 3 days that we had the sell-off down here, it fell $30. Again, to get these overnight moves, if I had traded this here, I would have done puts. Because it's a lot easier to hold overnight because you have the protection of the option where I can't lose any more than I risk in the trade. So if the trade goes completely against me here, like if we had rallied here instead of falling, if I had done this, I would have lost only what I risked instead of doing a swing trade. This was an earnings gap that happened here May 1st. Anyways, my niche is gaps and shorting, and that's what I'm saying. He said, well, how are you going to make money shorting if the market's bullish? I started trading in 2008. And again, it took me 3 years to develop my system. Most of the whole last 17 years that I've been trading, we've had a bullish market. Again, we had a brief period in 2020 when we had COVID, February, March, where the market sold off. And then it bounced back after that. So again, you can make money when the stock price drops. A lot of people want to go long because they seem to grasp the concept of buying dips. But the fact is, shorting can be very profitable. Puts can be very profitable. There's no emergency. There's no panic, really, for the most part, in longs. So like the market was up today. There was no panic buying that came into the market today at all. It would have looked completely different when it closed if it had. It doesn't mean we won't continue rallying. Maybe we will. Again, like I said, the market is back up in an uptrend now. But there was no panic buying that came in today in the market. When we had the drop-off, when we had the sell-off, again, April 2nd, 3rd, 4th, those days down, that we did have panic. And we had panic selling. And selling happens fast. And it usually happens very quickly into the morning, which is one of the reasons why I can focus on shorting in the morning and being done out quick for the most part. Again, I ended up doing Disney today, which was kind of a late trade because it was a long. And longs take longer to go. Shorts are faster. Again, this is why I prefer to short. Any questions here so far? How are we doing? Quiet group tonight. Let's look at the Apple. I'm just going to move this up here. So we did a day trade in Apple 5.5. This was a gap. Stock closed here, gap down, open, dropped. We shorted it. This is, again, a trade on margin. 203.30, 4,500 shares. Risk was 40.50. You could have taken 100 shares. You could have taken 500 shares. Again, dollar or more, out, done. 202.25. This kept going, though. I want to show you here. This is a nice trade. Profit was 47.25. Here's the 1 minute. Can everyone see this here? So I could have held this down. I mean, I could have held it down to 198 and change. I did not. Because again, I'm looking for the fast move, but here's the 1 minute. Okay, we're on the daily. This is a 1 minute chart. So I trade on the 1 minute. If you come and take my class, you're going to learn how to trade in the 1 minute. I'm rating the gap in the daily, trading, taking the entries on the 1. So here was the Apple. Stock closed here, gap down, open, rallied, boom, shorted it, got the drop, got out. But I just want to show you where this went. So I could have made almost $4 more, actually. Looking at this here. But again, and that was actually still a morning low. I'm looking at that. That was only 10:30. But I usually take the first move, get in, get out. Get in, get out, get in, get out. Again, where I don't have to worry about the market. I don't have to worry about a Trump tweet. I don't have to worry about a tariff war. That's the other reason to do the fast trades too. So like I was saying, who was in control? Who's been in control of Apple? The bears. Actually, the bears are still in control of Apple, even after today. Here was the Q comp. Again, here, stock closed here, gap down, dropped. We shorted it. 137.10 was the entry. Exited 134.90. This was a nice trade. Profit 39.60. Let's look at the 1 minute. Again, this was 5.1. Again, this is a 1 minute chart. Okay, it was May 1st. Stock closed all the way up here, snug as a bug. It was like around 147 and change. And then gap down. And again, who's in control of the Q comp? The bears. It fell. Here's how it ended the day. Oops, no. Let me go back. Here. That was the first. So again, the control is to the downside there. And then today was the Disney. Closed here, gapped up, rallied. Entry was 109.70. This is a tight entry here. Risk was 4,200. Did an add at 110. Cost average price was a good price. 109.85. Had a good exit on this too. Almost got to 111. 110.85. Made $7,000 on this. This is a nice trade. Here's a 1 minute. So here's where it started to lift, break out. Could have added at 110. Got the push. Boop. And again, this is a 1 minute chart. So again, here's where it closed Friday night. Here's where it opened this morning. So again, a lot of people want to do gaps for gap fills. That does not work consistently as a strategy. If you tried to play this to fill the gap today, you would have lost. Why? The bulls are in control. The bulls are in control of Disney. Okay? Any questions? Anyways, getting back to what I was saying. Oh, we do have one question. Zoe, here. I have it in here. 109.70. Then I added more at 110. Okay. So my average price was 109.85. And it ran up more than $1. I was trying to get it over, and then I just took it out. Again, I'm trying to get $1. No, we didn't short this. We didn't short this. We went long this. We did not short it. We went long this. Again, I said I tried to find a shorts today. I couldn't find any shorts today. So again, I will sometimes go long. Again, I might end up going long the market. I mean, I have no idea. I could change my mind, but right now I'm not. I'm not. So again, getting back to why I prefer to short, because the moves come in fast, because you have panic in moves to the downside. Panic is fear. Fear creates selling. You so rarely have something called panic buying. And again, I'm not saying that there's no such thing. You can have panic buying. I've seen that in some things I've played. Actually, last year we played Tesla, and there was panic buying that came in Tesla. I was in calls, I was in options in Tesla. We did those trades. They were huge trades. So panic buying can occur, but it's not as common as it is in shorts, okay? So like if you're like, okay, I'm gonna make my whole life every year, I'm gonna look every week or every day for panic buying, you're gonna not be able to trade every day. You're not gonna find panic buying every day. You're not gonna even find it every week or every month. So panic is more common where it is actually like this picture here is depicting, where it's more the scariness. There's no like emergency. Like if I said to you, Apple's going to go to 300, and you could see like, you could say, well, by when, Melissa? And I'm like, I don't know. It's going to go to 300, but I don't know when. So you might think about it tonight, you think about it tomorrow, and you try to see how much money you could put together, and you're going to consider maybe buying it. Maybe you'll wait a week. Maybe you'll wait to the next earnings. Maybe you'll wait till the tariff war is over. Maybe you're like, well, it's a 218, 211, 212, it's a 220. Like, there's no emergency. Because I didn't tell you exactly when it's going to go to 300. You still have time to get in. Okay. Do you follow what I mean? You're not even in it. You're not up, you're not down. And that's the difference between buying and selling. Between buying and shorting. And why, again, I prefer to short. And again, even though it sounds crazy that I couldn't find anything to short today, that's rare. There's usually is something that I can find to short. So again, how do I find the best shorts daily? How do I make the picks? I make the picks using the rating system, using the Golden Gap rating system. It's a 26-point system. And getting back to what I was saying, and this is what, again, is very, very important, is to use the system so that you're not getting in your head about what's going on with the tariffs, what's going on with Trump's tweets, what's going on with everything that you can't control because you can't anyways, okay? Because you can't control anything that the Fed's doing, that Trump's doing, or anything else. But you say, well then, okay, well then how do you take any trades? Again, you rate it. If it rates 20 points or more, I take it in the direction of the gap. You can say, well, what if Trump tweets and then everything reverses? Okay, if that happens, then you could lose in a trade. Because you are going to lose in some trades. Again, if I'm showing you the stats that there's 10 trades, and of the 10 trades, you know 3 are going to lose and 7 are going to work, then of that, then you don't get panicky yourself or crazy in your head if a trade doesn't work. Because sometimes a trade isn't going to work because something happens that you don't expect. In the environment right now, it could be literally anything. Like, again, I'm talking about tariffs, but it could be a war with India and Pakistan. It could be Russia-Ukraine war. I mean, there's so many global things that are happening right now that could affect markets. I mean, if nothing else, we've learned, you know, from how tightly woven and intricate the global market is with tariffs. If we've learned nothing else since the sell-off that we saw in March to April. Everything's very tightly woven together, you know? So again, if you just get up and look at what's happening in the chart, you're going to be okay if you follow it. If you start to go, again, blowing in the wind, that's where it gets to be an issue, because everybody has a different opinion about what's going on. Like, the opinions I'm giving you now about the fact I don't think the tariff war is over is an opinion that's probably different than other people's opinions that have been talking all day, where people think the worst is behind us. I'm not so sure that's the case. Anyways, getting back to what I was saying, I have a niche in doing gaps, and I'm following institutional money, which we've been talking about, and gaps are created with large institutional money. That's what makes the gap in the first place. So the professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. So again, looking just back at the market here, let me see if I can just pull it up really quick. When this happened, Any questions? I'm pulling this up. When this happened here, again, I don't think necessarily people were as panicky as they were then the 4th. Like if you go back, 4-2, just look at it. 4-2, where I'm on the Qs. 4-2, talk about panic selling. We closed at 476.15. 4-3, 4-4. This was like 50 points here. By the close of the day on 4-4, we were at 422 and change. Now we ended up lower than the following day before we flipped down to 402. But this was a more panicky day on 4-4. See it? So anyways, again, there's only one control. So you say, okay, well, the control is where now? So is the bulls in control of the Disney? For right now, yes. Will it last forever? I don't know. I don't know. Again, you play the trade in the moment that you're playing it as a short-term trade, which could be a day trade, or it could be an option you do out for a week. There were people, this was back in February, that were calling the bottom in the market when we sold off into the end of February. And I said that was crazy. That was ridiculous. Why would people even say that? You don't call bottoms. You don't pick bottoms. You don't pick tops. You don't, like, where's it going to get you? Again, if you're an active trader, an active trader where you're doing trades, you have to be in and out. You have to take it and book it. You have to take the trade, book it, take it and book it, chunk it out, chunk it out, chunk it out. Because if you're not doing that, then you're just taking a trade and waiting for it to go like 6 months from now. Like, again, if you want to do leaps, which are long-term options, and you say, I want to do a trade out till, I want to do a SPY trade, a SPY call, or a QQQ call. So you want to do a QQQ call out to January 2026. So the 600 calls, which would probably be expensive because it's far out, even though it's far away in the chart. It's like, okay, well, how do you know it's going to go there? Like, I have no idea if the QQQs are going to go to 600 by January 2026 or let alone above it. If it would, obviously, it would be a huge trade. But how would you know that? You wouldn't. Like, it's a lot easier to determine where something's going to go in a very short time period. So again, all the trades I'm showing you here today that we did on the 1-minute chart. I'm figuring it out on the daily, who's in the control. But on the day when I take the trade, I'm on the 1 minute because I'm an active trader and I got to make money right now, this second or tomorrow. And again, that's the point of it, because to try to predict tariff, when are the tariffs going to be over? Or again, the next thing that's going to happen after this that the market's going to react to, whether positive or negative, you'd be changing your mind every day, okay? And you'd be up in trades losing, and you'd be going nuts. So we have to make money with the moves that we can predict, which is the fast ones. So getting back to what I was saying, shorting gives me an itch. Why? People get scared. I mean, that week on TV, I did so many TV hits. I was like, should have just fallen asleep every night with my makeup on the week that we sold off. I had to say no to some things because people wanted to double book me. Everybody was scared. Everybody was going crazy. There was tons of panic selling. The world was over. You would have thought watching some TV channels, it was nuts. Then again, Trump reacted to that and decided to pause the tariffs 2 days later. So I don't know why he did any of it to begin with, the way he did it. But the fact is, you really saw in the market and people's reaction. I was in a cab, I remember that week, and the guy didn't have any idea what I did for a living. And he started talking about the stock market and tariffs, like cab driver. So, just everybody was talking about it that first week of April. So again, people have money in 401ks that don't even actively trade. We're talking about it, affected about it. People don't necessarily look at the retirement account. They don't look at their quarterly statements all the time. But people were all of a sudden worried, okay? Any questions here so far? So again, what if a small account, you could do one contract. What if you have a retirement account? You have to call the place that you have it and find out if you can buy calls and buy puts. Now, if you want to do a prop account and deposit money, prop places will give you a larger margin than 4-to-1. If you go to a retail broker, you're going to need $25,000 to get the 4-to-1 on margin, and I'm talking about just shorting the stock, or even going long it like Disney. That was a margin trade. Now, if you did the call and did it as a call, again, it was really cheap. It was dirt cheap. But if you wanted to do a margin trade in Disney, you would have needed the amount of the stock times the number of shares that you have divided by 4 available in cash in the account. Okay? So a lot of people like to do options because it's cheaper than buying the stock or shorting the stock. I get it. For me, I prefer to do options so I can get bigger moves overnight. That's how we captured some of that moves when we had the sell-off in April. But we had other times throughout the year where we were doing shorts actually in different stocks in the market before that big sell-off. Right now, I am not long the QQQs. I am not long the SPY. I know everything that's on tap for this week. Again, I may decide to go long the market, but I'm not 100% convinced that this is the end of the panic selling. So for now, again, it's like I may do puts in other things, specific stocks. We'll see. But again, my take on this whole tariff thing is to try to find selective stocks and selective trades that you don't need to have to worry about the overall market. And there are plenty of things out there to do that with, is my point. And some of them may be shorts and some of them may be longs. But for a lot of people, I think they're really caught up in the hype about what's happening right now with the trade war. And they could get caught on the wrong side of a trade, and then they could give all their gains back. Because the one thing that's very, very noticeable to me, I don't know if, can everybody see here, is bringing up the Qs again? I just thought of one more thing I wanted to say, and I didn't put this in the write-up. Can you see it? Hello? Can everybody see the QQQs? When, again, I wasn't long this. Again, it would have been a crapshoot going into the weekend. It would have been a gamble. So I don't gamble in my trades. But if I had gone long Friday, if I had gone long Friday, I would have been up a lot of money here this morning. But how would I have known that to do that? It would have been a crapshoot. It would have been a guess. It would have been a gamble. We could have fallen. Anyways, I want to point out something that I noticed this morning as well. I forget if I mentioned it in the room. If not, I'll have to tomorrow. This, I think I did mention it in the room though. I don't remember. This gap up here today, this bullish gap in the market, we haven't seen anything like this the whole year. Whereas we've seen a lot more bearish gaps like this. Do you understand what I'm saying? Like, I'm not going to go over one, but a lot. So again, it goes back to the whole philosophy of what I'm saying here about the whole panic. Because again, if you're going to be in something and you're going to get the gap, and again, I'm talking about if you're in the option, if you're in a put, or even if you just want to, you just wait, you see the gap and you want to do a day trade in short. Again, we've seen far more of the scaredy ones to the downside this year. You know what I'm saying? So that's just something to note. Anyways, we did go long BA. This was 2 weeks ago. Here's a call that we did. Again, this was on its own. This was an earnings trade and it had nothing to do with tariffs. We went long BA. It was a 190 call. It expired last Friday. Got the pop the day before. Here it was. So we did a 5-2 right here. Closed here, gapped up. And then, poof. And you could have actually held this into the last day, but I didn't do it. Again, we did the 190s. I did not do this today, but this gapped up today with the market, but this was a trade last week. This was so cheap. Again, this is one of the reasons that people like to do options, because they're cheap. Whereas if you're buying the stock, it's $180 some a share to go long it, where we did it. So again, I get why people like options, but for me, it's the idea of getting the move, the bigger move, okay? So anyways, cost of this was $1.50, sold at $4.95. It was a beautiful trade. I think this went over 5 by Friday too. I just didn't hold it to Friday. I got out of this the day before the expiration. Was a 230% return investment. So you could have spent $150. You could have done one. You could have bought 10 contracts and spent $1,500 and made more than twice the amount. Okay. Nice trade. Again, here's the move. Boop. And went up. So again, I didn't get in this today, but I was watching it. Then here was the Disney that we did, not the Disney today. This was last week's Disney, which actually you still could have been in. So I didn't even look up what this trade was worth today. But this trade today, here's the trade. You could still be in, and you could have made double, I know. But I got out of it. Again, I take trades, I make money, I get out. This was a good trade. It was a beautiful trade. I called it on 5-7, and I got out of it the next day. It went. But you could have still be in this trade because it didn't expire till Friday, this Friday. So again, I did this trade here, and I got out of this trade here. But you could still be in this trade, and you would. This is worth over $5. It might have run up to 6 or 7 today. I didn't look at it because I'm out of it. But this was a nice call. So again, there's times when I get out of trades and they keep going. Again, this was on its own. 181% return investment for me, but again, if you held it through today, it ran up today to almost 111. So it was, again, $6 in the money from the 105 calls that I called, which the day that we did it, it didn't get to 105, which was the 7th here. See it? So again, tariff war, no tariff war, whatever, this was another nice gap. This was an earnings gap too. But getting back to what I was saying, think about it. The benefits of shorting is that you get these, exasperated moves, which sometimes can be huge. And then when you get really big trades, they help you move forward because you are going to have some trades that lose. So then you get some big ones, and then the big ones cover the losers. And then you have the normal amount where you have a chunk of winners. And so I think when people are scalping and they're taking a trade and making a little bit, taking a trade and making a little bit, taking a trade and making a little bit, it's so hard then for people to really get anywhere with it because they're just making a tiny amount, a tiny amount, a tiny amount. Like when I'm saying that I'm getting out of trades fast, that doesn't mean I'm only making 10, 15 cents. I'm still trying to get a big move. And again, the benefit of shorting is that big moves happen in shorts. Big moves happen to the downside because of this idea of fear and panic. But in general, I'm looking for 1-to-1, an average of 1-to-1. And again, how do I do it? I look at the rating system. So the rating system looks at 26 points of the daily chart of a stock. The rating system is a checklist. The checklist tells you what to look for in the price of the stock to read direction correctly, to know what stock to short and when. And the idea is to do something where you don't have to worry about what's going on with the tariff war. Because if you have to worry about that, or predict where the market's going to go for your trades, or predict what Trump's going to tweet, then you're going to have a very rough year. Because I think this continues. I think it goes on. And again, I said this earlier in the conversation, Trump is not going to be able to control what the Fed decides to do. So tomorrow is actually, there's some important data tomorrow morning. So it could be an interesting day to trade. It could be a good day to trade. Again, I don't know if we gap up or down. I don't know. But I'm saying it could be a very interesting day to trade because we have an inflation number out. So people are going to be talking about the Fed and interest rates tomorrow when that number happens. That's been part of the discussion about tariffs, that they have created higher prices. That's why Trump wants the Fed to drop rates, but they're not going to do it. Why? The economy's too strong right now. Unemployment's still too low. Inflation's still too high. Okay. So anyways, have a positive attitude. Some days are easier than others. I get it. But the bottom line is that there's only one person that is taking the trades and looking at what's going on, and it's you. So you have to be your own best friend and think positive yourself. Otherwise, everybody else that's in the market wants your cash. They want to take trades and take the money away from you. So you have to be your own best friend and advocate. On a long position like Disney, does a 26-point checklist get reversed? If you're asking me if the bullish Golden Gap course, which I have not done for like 2 or 3 years, that's not a class I teach every month. If you're asking me if the points are exactly reversed to go long, the answer is no. Are some of them? Yes. Are all of them? No. Why? Because going long is different than going short. So I will go long. I do go long. I've thought about setting a date for the bullish Golden Gap class this year because I haven't done it for so long. Like, I literally think the last time I did it was 2021. So it could be 3 or 4 years. But it's not a class I teach all the time. If you're in the room and I call along today, like in Disney, you just do it with me. You just do the trade. And if I ever decide to plan the bullish gap class for this year, you know, you're on the marketing list, you'll see it. But the points are not all in reverse, if that's what you're asking me, because going long is different than going short. It's the same thing with the entries. It's the same thing. And again, like today, Disney took longer to go. If I had wanted to short Disney today, it would have gone faster, because that's just how it is. So that's why I'm always going to the short side first, because I prefer to short because it go faster. But if I can't find any shorts like today, or there's a really good gap that's a bullish gap, then I will go long. And if you haven't done the bullish class, you just follow me in the room like everybody else does, you know. Anyways, it's important to get education. And that is the one thing, like, again, in the number of years that I was teaching people, which has been 14 years now, like, I've seen and talked to many people all over the world. You know, people start out, they do a class, they start trading, they lose money, and then they kind of, you know, feel like, oh my God, this education, I don't know if it was worth it. If you learn a good system, it is always worth it. It's the fact that there are lots of classes out there that don't really teach you how to make money or how to trade. Now, when I took the first and only class I ever took, I actually didn't learn from that class how to make money. But I didn't hold it against the person. I think I had an overblown expectation of what I was going to get out of that class. And I think that's the case a lot of times when people just think all of a sudden they're going to take a class and they're going to make millions of dollars. There may be a learning process that you might have with my class. But that's not to say that you can't ask me questions or email me and, again, be in the room where I'm here to answer the questions. With me, when I learned from this person that I took the one class I only ever did, I did learn technical analysis. That information allowed me to develop the system that I still use today. So I learned from that person and from that class, not how to make money trading, but I learned how important price action was. I learned that technical analysis is the way to develop and read price action, but I didn't know how to predict it at the time that I learned it, but I figured it out myself. And again, like I said, it's based on the gap, and it's based on the daily chart, and it's based on following who's in charge. Who's in charge? So again, the market is back up in an uptrend. Are they going to stay in charge? I don't know. I don't know. It's too soon to say. Is the best word that I can say. But anyways, getting back to taking risk, you want to take calculated risk. When I take a day trade, I put the stop in. You don't want to take risk for risk's sake. That doesn't make any sense. And, you know, again, I know a lot of people want to, you know, do that when they start to do something. If they've been trading for 5 years, 10 years, longer than I'm alive, and they're losing money, and then they just want to go hog wild, you still have to think thoughtfully about trades that you're taking and assess your risk based on the size of your account that you have now. Every trade should be risk-wise, dollar and cents, close to equal on all your trades. It's not an exact science. If you want to risk $1,000 and you end up risking $10.75, that's not a big deal. But if you want to risk $1,000 and you end up losing $3, well, that's kind of a big deal. Then you got to take 3 good trades where you risk 100% or you make 100% just to get back break even, when you shouldn't have to do that, you know. So again, getting back to thoughtfulness, planning, create a plan of action to achieve your financial goals, whatever amount of money it is that you need, that's up to you. It's up to you. You got to figure it out. But the rating system is a 26-point checklist. This is what you learn from me. It measures gaps by rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, big move on the day. That's what I'm always trying to get. Early confirmation of the bias on the move between 9:30 and 10 a.m., which we did get today with Disney, actually, and precise entries with follow-through and a good risk-to-reward target potential. So I never know when I look at something necessarily where it's going to go. By, an hour into the day, I can kind of see this one's not going to go where I thought today. It's not going to go to the second or third target. It's going, but it's not going to go here. Like, again, as the day goes on, you're running out of day, and you kind of have to make an assessment where you're looking to get out of the trades. But you should have an idea even before the open. So if you come and take my class, you will learn the Golden Gap System. The Golden Gap System is a 26-point professional bearish gap rating system. The purpose of this system is to help you evaluate which gap to trade each morning using a checklist. This checklist tells you what to trade when and in what direction. The 26-point checklist predicts directional bias of a stock. So again, like we were talking about, following one system will help you be successful. Staying on target with your risk, keeping it the same, will help you. Getting out, booking profits, okay? Not blowing by the wind with the news. Trying to figure out who's the control and then trading on the side of the control. Focusing on the charts, not focusing on what's happening with tweets and news things. Because you might see something and then you see it in the chart and then the earnings may be the opposite of whatever you see or hear on TV. Again, all that stuff can really get in your head, but the chart is not going to lie to you. And we all have the same number within seconds. It's milliseconds of live data that we all see. So anyways, you will learn in the class the Golden Gap course checklist. This is a checklist which tells you what to trade. And again, we're focusing on shorts. If I do the bullish classes here, again, I'll give people time to plan it. But overall, for the summer, we're basically almost at Memorial Day. I can't even believe it. Two weeks from now is Memorial Day. It's a great summer job because we trade it in the morning. You can have the rest of your day to yourself. In the summer, particularly in the afternoon, we get the summer doldrums where it's just things just kind of sideline. So the time to make money is the morning. It's the primo time to trade. And if I take an option and I don't get the move in the morning that I want to hold it, then I'll just leave it be, hold it, watch it, hold it overnight, get up in the morning and check it the next day. Again, even if you go to work and you're not in the room every day, you can check in the morning to see where your trades are if you're in overnight options. So again, my class is called the Golden Gap course. I teach it once a month. The class is a class on how to find, pick, and play professional bearish gaps. Class is online. You can be anywhere in the world and take it. So you have a couple of weeks here till the next class. So the class is $69.99. It's a class on how to find, pick, and play professional bearish gaps. Class is online. Again, this is June 7th and 8th. So that is the June class dates if you're interested. Any questions from anyone about anything at all? How are we doing? Hello, is anyone there? Good lecture. Zoe is there. I don't know if I'm pronouncing your name right. I don't know if I'm pronouncing your name right. You'll have to let me know. Or I'll just call you Z. Oh, Zoe is right? Oh. Just guessed. Listen, it's an interesting time to trade. The year started out very calm. And then things started to change. And then they've changed again, and they could change again, and they could change again. That's what makes trading exciting. Like again, I have no idea when I'm going to trade tomorrow. I didn't look at what earnings are out tomorrow morning yet, but there's always something to look at and do. I do know about the economic data that's happening tomorrow morning, though, that's very important. So again, if you're somebody that likes to have the news on in the morning, you can turn on any one of the channels, the CNBC, Bloomberg, Fox Business, and hear the data tomorrow morning. But everything that we're doing is all gap related. And again, I just prefer to short. But when I think about when I started trading, again, I started trading in 2008. The market fell for a brief period. Remember when was the bank bailouts, 2008, 2009, And then we were pretty much bullish from 2010 on up until really COVID. So most of the life that I've spent trading, even though I've mostly shorted, has actually been the majority, 90% of the time I've traded in the years I've traded in the 17 years has been in a bullish market. So you can find shorts in any market, but